If you have just lodged your 2025 tax return and you are thinking, I could have claimed more, you are probably right. And if you are one of those people who got a smaller refund than expected, or worse, ending up owing money to ATO, then this video is exactly what you need to watch. I am Ash from ClearTax and I have prepared tax returns for over 3,000 Australian taxpayers. And here is what I have seen every single year. People missing out on thousands of dollars in legitimate deductions, not because they are doing anything wrong, but because they don't know what they are entitled to claim. So, in the next few minutes, I'm going to show you 7 proven strategies to legally maximize your 2026 tax return, how to avoid ATO audit triggers, and most importantly, how to set a proper record keeping system now so you are prepared for next tax season. Let's get straight into the first strategy, which is mastering your work from home claims. This is the big one. It was also the ATO's #1 audit target for 2025. They believe people are double dipping on their claims. So you need to get this right. You have 2 methods to choose from. First method is a fixed rate method. It's pretty simple. You claim 70 cents for every hour you work from home. So if you worked 1,000 hours from home this year, that is $700 you can claim. But here is what most people don't understand. This 70 cents covers your internet, mobile phone, electricity for heating and cooling, and stationery. So that means you can't claim these expenses anywhere else in your tax return. If you do that, that's double dipping and ATO will flag you. What you can claim on top of your fixed rate are things like office furniture and technology. If it is over $300, this needs to be depreciated over their effective life. The second method is the actual cost method, where you calculate the actual work-related percentages for your expenses. It's more complex, but it can save you significantly more. For electricity, you need to work out the cost per unit, the power consumption of your equipment, and your total working hours. It sounds complicated, but the ATO has calculators on their website to help. Here is my advice. Calculate both methods and choose whichever gives you the higher deduction. I have seen clients save extra $2,000 just by doing this comparison. My second strategy is claiming car expenses. If you are using personal car for work travel, you can claim these expenses. With work from home deductions, there are 2 methods you can use to calculate your deductions. The first is the cent per kilometer method. With this one, you claim 88 cents per kilometer capped at 5,000 kilometers. That is a maximum claim of $4,400 and it covers everything: fuel, registration, insurance, and repairs. The second method is the logbook method. Here, you have to keep the logbook for 12 weeks showing your work-related travel. This logbook is valid for 5 years. You can claim that percentage of all your car expenses, including fuel, registration, insurance, repairs, and even depreciation. Let me give you an example. If your logbook shows 60% work use and your total car expenses are about $8,000, you can claim $4,800. That's about $400 more than the cent per kilometer method. Again, calculate both and choose the higher amount. Strategy number 3 on my list is to maximize your tax return is capital gains tax optimization. If you have bought and sold shares, crypto, or investment property, there are 3 strategies that can save you thousands. First, the 12-month rule. Hold an asset for more than 12 months and you only pay tax on 50% of the gain. Second, offset your losses. If you made 15,000 gains on your Tesla shares, but you lost 8,000 on crypto, your taxable gain is only 7,000. Third, maximize any CGT exemptions or concessions you may have access to. For example, if you have lived in a property as your main home and then moved out to rent it, you can still treat it as your principal place of residence for up to 6 years, even while you are earning rental income from it using the 6-year rule. My next strategy is to see if you can salary sacrifice extra contribution into your super. Here is how it works. Instead of receiving $5,000 as a salary and then contributing into your super as an extra contribution, see if your employer will allow you to sacrifice it into your super. This basically means they will pay it into your super pre-tax. which will mean that 5,000 is taxed at 15% in super instead of marginal tax rate. If you are earning $80,000, your marginal tax rate is 32%. So instead of paying $1,600 in tax on that 5,000, you only pay $750. That's an immediate saving of $850. The catch is obviously that you cannot access this money until you are 60. But if you are building a long-term wealth, this is incredibly powerful. Strategy number 5 is to make sure you are claiming all the deductions you are entitled to. Some common ones I see missed include work-related clothing. If you wear uniforms, protective clothing, occupation-specific items like scrubs, high-waist gear, you can claim them. You can even claim the cost of washing and repairing these items, tools and equipment. Anything you need to work, laptop, tools, even a work-related handbag can be claimed. Items over 300 needs to be depreciated, but items under 300 can be claimed in full. Professional development, courses, conferences, books, subscriptions, if they are related to your current job, they are deductible. Tax agent fees. The cost of preparing your tax return is deductible. If you pay an accountant $400, that's $400 you can claim. But if you can't prove it, you can't claim it. So strategy number 6 is to keep good records, especially since the ATO is getting stricter about record keeping. For work from home claims, keep a diary of your hours. For vehicle claims, keep a logbook if you're using that method, or at least a record of your work-related kilometers. For all other expenses, keep receipts, invoices, and bank statements. And at last but not least, strategy number 7. Don't lodge too early. The ATO has put early lodgers on their hit list because they know people who lodge early often get it wrong. Don't lodge until your income is showing in your MyGov account, including bank interest, dividends, and share sales. If you lodge too early, you will get flagged for an audit, and if you got something wrong, you will face penalties. So just be a little patient. So that rounds up my list. Look, maximizing your tax return isn't about finding loopholes or pushing boundaries. It's about understanding what you are legally entitled to claim and having the record to back it up. The strategies I have shown you today are used by thousands of Australian taxpayers every year. The difference is most people don't know about them and don't take the time to calculate which method gives them the best results. So here is what I want you to do. Don't just pick one method and hope for the best. Calculate your options. Compare the fixed rate versus actual cost to work from home. Compare cents per kilometer versus logbook for your car. Run the numbers on salary sacrificing. And whatever you do, keep proper records. If you want someone to handle all of this for you, you can book a consultation with our team at ClearTax. The link is in the description below. Thanks for watching. I'll see you in the next one.